All right, hey there. Good morning, everybody. It's a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 5th of April, 2022. And man, oh man, glad to have you guys checking in. I've posted some, as I tend to do, some macro themes and whatnot going on. If you guys have been following me for the last year, you'll know these are things that I talked about already, especially, earlier last year, mid last year, talking about things to watch for, things that were likely to happen. And we're seeing them all coming together now. I've still got the hyperinflationistas still, being their usual rude selves. And it's silly. But it's the same thing that happens every cycle, guys. You get the same type of people doing the same thing, and they don't understand. And that's the problem. Man, you know what? You couldn't act this stupid so publicly back when I was younger. We didn't have all this social media and everything. You can come out there and look like a fool in front of everybody. You just look like a fool in front of a couple of people. But nowadays, and I don't even mean that in what they think, rather in the way they go about it. If your first thought is to come at somebody that you don't know in a subject matter that you really, truly don't understand, that you have no real education in, and your first thought is to come at them very rude and very disgusting. I mean, that says a lot about who you are as a person, and not in a very good way at all. So I hope none of y'all ever do that. And if you have done it in the past, I hope you don't do it anymore. Again, I've been around for almost 50 years now, and, time seems to temper the way that we act. When we're young, we're mouthy, we're chest bumping, stuff like that. And as you get older, and hopefully as you get older, you become wiser, and you realize that's just a silly way of going about things. So we're going to talk about some of these metrics that we were talking about previously that I've talked about, and I've actually got some posts that I've put out this week that are kind of giving us some real numbers for that kind of stuff and showing that it's more or less exactly what I said was going to happen. It's not that I'm anything special. It's just I've been through this a few times, guys. And every time, you can talk to anybody that's been through these markets multiple times, these cycles, and they will tell you that every time it's the same thing. At the top, it's the same thing. At the bottom, it's the same thing. It's just by new people. That's all. So we're going to talk about all that. Hey, listen, if you haven't joined us yet, we'd love to have you with us over here at Texas West Capital. You can join us. Click on this green button right here, and it'll take you to our site here at howtotradetowin.com, and you can scroll down the page there, and you can look at the different, we have 3 different tiers. By the way, this is 80 hours of educational video content. We're well over 200 hours now that you're going to have that you can go back and look through, plus 3 live streams every week. Mondays, we talk about Wyckoff. Wednesdays, we talk about tips, tricks, and techniques, and then, which usually has a lot of rules-based systems that anybody that's never even traded before can use. Just adhere to the rules. And then Thursdays we go, deep diving into Elliott Wave. And so, there's so much more there. Jump on there, join us. We'd love to have you there. I think even more so than me, I think it's really just the people that we have there that makes it so amazing. The fact that most of our members have been there for multiple years now, I think is a test to what we do. I can sit here and tell you all day that I think what we do is great, and I really put a lot of effort into it, and I really try to help you understand. But it's the people who are in there who continue to come back, and they don't get it for free. They got to pay, and so they're choosing to vote with their money, I guess is the way to say it. So I think that's something we've got above and beyond pretty much everybody else out there. Is we've got people that have been with us for 2, 3, even 4.5 years, as long as we've been around. So. Still here today, believe it or not. Love to have you there, though, okay? Let me see here. Who's here already? We've got Claudio. What's up, man? Let's see here. Dancer Eddie 13. What's up, man? BR checking in from Berlin. What's going on, buddy? Let's see here. Yeah, we're going to hold this level, I think. I think we're good to go. Hank, what's up? Keith is here. Chris Baker's checking in. Good morning, sir. Andrew, good morning. Nevlusian. Jared the Great, what's up, buddy? Michael Williams is here. Data is here. Tell You Rider checking in as always. He says, nice little DXY surge this AM. Yeah, I just checked that out right before we got this thing going here. DXY continues to rally, much to chagrin of everybody that's been calling for it to fall lower for over a year now. Again, I gave you the reasons why at the time and what we were looking for, and so far it's continued to play out. Almost at that 100 level now. ARM, what's up? What's up? Man, I'm saying what's up a lot this morning, right? Feeling like a pretty good morning. I'm a couple of really good trades right now. It's hard to feel bad, I'm short the euro from, let me pull it up over here. I am short the euro right now from 1.10967. That means I'm 178 pips in profit right now. And then, of course, I am long with Bitcoin. From where? 45472.9. So, having a great morning. It's good stuff. May have found a place in Houston. There's a couple of issues though, so maybe not. We'll see. But really looking forward to getting that all taken care of, so I can really concentrate fully on what I do with y'all, especially in Discord and here on these streams on Tuesdays and Fridays. TV Canal, what's going on? Daddy-O is here. Matthew Bolts, good morning, sir. Crypto Critical, how are you doing? Let me see here. Dominicus, good to see you making it live here, man. Did I survive the rain and hail last night? We had rain and hail here? Wait, are you thinking about Houston, or are you thinking about where I'm at right now? I'm in Bernie right now. I don't think we had any rain and hail last night. If we did, I slept through it somehow. Looking to right now I'm looking to relocate. I can't even say it. Relocate the company to the Houston area, to H-Town. So, and that's going to open up a whole bunch more that I can potentially do as far as what we do. So yeah. Patrick, glad to have you check it in, man. I hope you hang around. Gert says people tell you this is the place to be. Man, I love to hear that, because most people tell me that I'm a hack. I'm a scammer, all that other silliness. So glad that you check it in for yourself. All over Texas, Matthew says, no, we're pretty good right now, just north of San Antonio. We're pretty good, so yeah. Well, Zobia, what's up, man? Hey, how are you doing? And Hold Hal is here. He says this is the place to be. Glad to see you guys seeing that. So let's go ahead and jump on this, man. I'm really excited, as always, to have you guys check in. And those of you that have been around a while, you know that I don't talk fluff. I don't try to get you all emotional. Again, I look at the charts. I explain to you what I'm looking at and why, and what it means to me in what I've done for, over this last quarter of a century now. And I try to remember to tell you guys the things that I've learned along the way that took me time to do it. Things that I had to learn the hard way, and in hopes that you'll take it to heart and it'll help you as traders. So maybe you don't have to go through a lot of the nonsense that I went through. So we'll see there, right? Camila, good to have you here. MB is here as well. Man, you guys are new. Man, this is awesome. You can, if you want to get in the Discord, you can join us at, again, TexasWestCapital.com or HowToTradeToWin.com. You can come in there. And then that's how you can get in with what we do there. Tier 3 is the one that gives you access to all the educational 3 live streams every week. And then you have access to everything else that I've taught over the last couple of years. So like I said, well over 200 hours, plus some other video educational stuff that I've put out there. So, the goal of what I do, listen, guys, for those of you that are new, I've got a story. I'm not going to go over here at the moment because we're going to get on with what we're doing here. But basically, at the end of the day, what I do with TWC is I look back at when I first started, I say, man, if I had known what I know now back then, how would it have helped me? And then I go in and I try to teach our members these things that I would have liked to have known, or that I didn't even know I would have needed to have known back at the beginning. You guys are lucky, man. I started this in 95, which was before the internet was this big, huge thing. So you guys are starting now where you've got all this information, a lot of it for free or really cheap. And a lot of it's good, but a lot more of it is either half-truths or outright lies. And within that, the people giving you this information are one of two types when it comes to those types of, outright, half-truths or outright lies. One is that they really believe what they're saying, in which case, it's like the blind leading the blind, right? You don't want to be a part of that. The other one is people who are just telling you these other things because it's what you want to hear, so that you can follow them and make them big, so they get these big followings and and make these become social media influencers, or so they can sell you something, right? Everybody's got this technique that's going to just change your life, and it's the best thing ever. And guys, I'm here to show you week in and week out that everything that's been tried and true over the years works today. Elliott Wave works. It's around today because it still works. Wyckoff is around today because it still works. But it's like anything else you do in life, anything else you learn. You have to learn it correctly, and you have to practice. I mean, it's not going to happen overnight, guys. Too many times with crypto Twitter, man, we see people jumping in there. They half-ass their way through Elliott Wave for about a day and a half, and they go, oh, it doesn't work. Well, it works. You just haven't really put forth any real effort in it. So hopefully you guys are here to learn a little bit and, pay attention because I give you a lot of stuff that I've just learned over the years that you're going to get for free listening in here if you pay attention. And they should help you out, okay? Let me see here. Oh, who's that in blue there? Nay, Mr. Wilkes. You subscribed to the newsletter today? Good. New to crypto and unfortunately down 40% since November 2021. Followed Scott for a few months now. Really enjoyed the stream that I did with him last week. Looking for the advice, although it seems rather complicated to me. So the best thing about it is the more you listen and pay attention and pick up things, the easier it becomes. But it's like anything else. It's like learning a new language, right? At first, you learn a couple of words and everything else just sounds like, what the heck? I can't understand it, right? But the more you listen to it, the more you study it, the less complicated, the easier it becomes to understand, right? And so it's the same way with here. That's what we do with Discord. Discord's there to kind of put you in this area where everybody's talking about it all around you, and you end up picking it up along with your, learning it. It helps you pick it up. It's like learning a new language, just putting yourself in another city, right? And learning it, the language there. So that's the whole idea. Don't be discouraged, guys. Anybody can learn to trade. I really believe that. But we try to either make it too complicated or we're too impatient. We let our emotions rule. And those are things that are going to, that give us the hard time. Okay? So, Dancer, your wife thinks I sound like Charlie from Always Sunny. I don't watch Always Sunny in Philadelphia. I've seen the commercials. I've never really watched it. I don't know if that's a compliment or not. But I'm going to assume it's a compliment. We'll just go from there. Nobody tell me if it's not, okay? Hey there, Oscar. Good to see you. Bucky, what's up, man? Scott brought you here? Good. Yeah, by the way, guys, if you are here because you saw me with Scott last Friday, I think him and I are going to try and get something together much more, maybe even weekly if we can, and look at some charts together, kind of like what we did there. So I'll be looking forward to that if we can do that. Anyway, okay, guys, so let's jump in here. Here's what we've got. I've got the 15-minute chart here. And so what do we get? We got this move up here. Let's see, that was, what day was that? It was the 28th of last month. So that was like around Monday. And then we came down, right? So we got this ABC down. And so at this point, either wave 4 is complete, and then this is, a 1 with a flat for 2 here, and then potentially another flat here, too, okay? Or this is all a triangle. This is this red count here. Looks a little fumbly here. But basically it would be A, B, C, D, and then basically E here. Now, in either case, it looks like it's potentially done. If you're trading pivots, it's what you would expect. You fell through the pivot, you find support around the S1 pivot, and that's a big, huge, bullish engulfing kind of candle going on there. So now we want to see, can we get this rally up? You can notice right here on the 15-minute, you got this little bit of bullish divergence. So you got these higher lows here with the oscillator, these two low points. And they correspond to these two, let's see here, these two low points here with price. So you've got lower lows with price, but higher lows with the oscillator, which says a reversal of the trend. And so the trend was down, so we should be looking for it to go up, okay? So that's what I'm kind of looking for now. But there's no real clear, is it, the black count or the red count? But it really doesn't matter because in either way, they both need to head up. They both need to stay above this swing low over here, this 45, 129, and 93 cents area. if price drops below that, then both of the counts are invalidated. As it breaks up, if it breaks up above this swing high, up here around 47,200, then either count would be validated. It would be confirmed. So it really, again, guys, what I tell you about Elliott wave is, it's good to understand trends and possible reversals and where they're happening, more so than exact targets, right? And so Elliott wave is good because it gives you a system in which based on the way that people generally act, the market is not random, okay? And so it gives you these things you can look at, these validation and invalidation levels. So that becomes that validation level there. And so that's kind of what we're looking at, right? If the black count is correct here, then wave 3 has a minimum expected target of 48,374. This larger 1, 2, 3 has a minimum expected target up here around 50,100 or so, which generally I'm looking for wave A here to kind of end probably around this 50,000, 1 or 200 up to the EQ up here of this supply structure, 51,382. I'm really kind of looking for price to get up there if it can. This right here, this is the daily R1 pivot there, 51.14, which makes it generally a target that we would use. So if you were to go here and everything else aside, take off Elliott wave and everything else, you just trade pivots. Price moved in sideways between the pivot and the R1, came down, tested the pivot as support successfully. It's rallying back up. It's trying to break out above this swing high here. Its initial target's going to be that R1 pivot. And usually what happens is you get the push up here, you get the pull back into this cluster here, this demand, this becomes one large demand structure, right? It creates a base. And so usually you'll break out the R1, you'll pull back, maybe you'll push out a little bit above it, you'll pull back to this cluster to find support, and then you'll break off and head up higher again. And that's usually what we kind of look for with pivots. Everything else aside, if again, if the Elliott wave and the Wyckoff seem a little bit too complicated for you, I mean, generally with pivots, this is kind of what we look for. So right now, looking for it to break on out toward that R1 pivot area, which, as you can see, of course, it's up there because that's where all that resistance is, right? So it's a significant area here. Just above it there, resistance over here. Always look left, guys. Support right here. Look at that. So, you would expect to kind of get rejected area, pull back, regain composure, and then push up there. In terms of the bigger picture, for those of you that don't know, where is my thing? Here it is. So this is what I think we're kind of doing here. And so this is a combination of both Wyckoff and Elliott wave. And so, again, this would be wave 3, this big circle wave 3 here. And wave 4 is this triangle. So with this triangle, we've got A down, B up, C down, and we're working on D up. Now with wave D, it's a W, it looks to me like a WXY. So that would be an ABC for W, triangle for X, and this is A that we're working on of Y. So we'll go A, B will pull back, and then C probably up there around that 58,000, 60,000 level for wave D. And then it'll come back in 3 waves down, potentially toward just this high volume node right here at about 47,400 or so. And that should finish wave E, and then wave 5 will be off to the races. Okay? So this is that bigger picture what we're looking at. This does really appear to be accumulation here. The price action and volume here match for what we're looking for. You can see that we've got volume picking up all in this area right here after we've come down here. Again, I was that guy that said this is the top here. I was the guy that said this is likely the bottom here. And here we are again coming back down. I said this is probably the bottom here. I always give you guys options. I always say, listen, I can't guarantee anything. Nobody out there can guarantee anything. If you've got anybody coming on here saying, listen, I guarantee you the price is going to do A, B, or C, or whatever they say, go the other way. Because one, either, again, goes back to what I was talking about earlier. One, either they really believe they can guarantee you, which you can't guarantee, right? We're human beings. We don't know the outcome of every decision, the possible outcome of every decision that's made, right? Or the decision tree that comes off that, right? Because you make a choice, and then you come up to another choice, and then you have more branches. And then depending on whichever way you go, you're going to have more choices either way. We can't figure all that out. So there are no guarantees with trading. So those that guarantee you either, one, don't understand that, which means you need to stay away from them anyway because they're drinking their own Kool-Aid. Two, they do know that, but they don't care. They're just trying to tell you what you want to hear. And then that way you'll follow them or you'll buy from them or whatever, okay? Be careful out there, guys. Again, there's a lot of great free information out there, but if you're new to trading, you really don't understand it, then you're in that catch-22 because you don't know which of it is actionable, real good information, which is the half-truths, and which are the outright lies. And so, again, with what we do at TWC, I try to cut through all that noise and all that fluff and all that moon nonsense and try to just get you guys to look at the charts and understand how they happen, why they happen the way they do, so that you can trade much more effectively. I teach you the importance of risk management. Number one most important thing you'll ever do as a trader, guy, is risk management, okay? Should be something that you're doing every day, all day when you're trading. So this is kind of where we're at the moment here. We want to see some catch up. We had this good little move here, kind of pulling back at the moment. We want to see if we can get some further upside there. The 1 hour, as you can see here, didn't quite dip into oversold. We've still got higher lows. Got higher lows here, so there's no bullish divergence, anything like that. Potentially a bullish engulfing candle here, but we've got another 30 minutes to figure out to see what it's going to do here. I thought maybe the 1 hour may reset into there, but again, it hasn't, so I'm thinking, it might be ready to go up there. 4 hour hasn't set down in there yet. So again, it still gives me pause. I'm still cautious with it. We want to see the breakouts. And so what do we want to see? The first thing you want to see is a breakout above 46, 611, and 4 cents. If you can do that, that's going to suggest, hey, you know what? That bottom may be in. That's your first real clue there. And then that breakout through this 47,200 is going to be that. It's going to add that confidence to it. It's going to say, yeah, most likely wave 2 is complete and wave 3 is in progress. Notice nowhere in there did I guarantee you, did I say it's definitely happened, because you can't, guys. You can't, okay? So that's what we're kind of looking at here. Again, you kind of look at this, as we're going here, and so you have this A, B, or 1, 2, right? So if this is a flat correction, you've got this 1, 2, and then 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5, or 4, 5 right here. Or maybe that's 4 and 5 coming down here still toward this S1 pivot. I think it kind of holds at this area regardless. Again, if this is a 1 and a expanded flat here, getting us down to the S1 pivot's only a 78.6 retracement, which is a solid wave 2. So makes a lot of sense. Again, if you're trading pivots, you have the breakdown through the pivot. You usually look for that reversal at the S1 if you're going to head up higher, right? And so it seems to set up as a great area. So it could be from right here, right above it, or maybe this is 1, 2, 3. This is a 4 here, and we still got a 5 a little bit lower there to go. So looking for the breakout, 46,611. Looking for the breakout, 47.2. Looking for the breakout, 47,469. This other one here, this 47,624, is if this is 3 and this is 4 down here, it's that wave B. Breaking out through that adds the confidence to the macro count. So that's the larger count. We're looking at the interior waves right here. If wave 4 is done here, otherwise, again, it's a triangle and wave 4 is still printing here, okay? So, and you say, okay, well, Chris, you've got a couple of different options there. What's up with that? Well, again, if you're new and maybe you don't know, a lot about markets, really, we're just sideways, guys. This is sideways. This is your range. You get your range from the lows down here to the highs up here, and you're just sideways. And so when price goes sideways, it opens up options. Because, as it develops sideways, it just leaves you with different options that you could potentially be looking at. And so that's what's going on there. It's just part of trading, guys. If you're new to trading and you're looking for guarantees of some sort, unfortunately, that's usually what happens, and then people get drawn in by those who guarantee to them, and then they end up losing money because they don't know anything about risk management, and they don't understand that guarantees are not legitimate ways to look at the market. But again, guys, the market's going to do what it's going to do. It's our job as traders to analyze it and to understand what may be happening, which means then we have to understand where those validation and invalidation levels are. But that's the great thing about, about Elliott wave. Whether you're reading it right or wrong, you always have validation and invalidation levels. So you're never going in blind if you're using Elliott wave. You always know at what point it's more likely or less likely to be correct, and you can trade accordingly. Let me see here. No, the pivots themselves are just based on previous areas of support and resistance. It's based on previous candles, opens, closes, and whatnot. And so, basically the pivots just kind of give you those previous areas of support and resistance. That's why I say you guys always look left, because where you find those areas is where you're likely to find them as it continues over until price moves beyond them. If it drops below the invalidation level here, what are we looking at? Let me see here. Let me see. So the way I look at this is your invalidation level right here, at this first one right here at 45, 129, 93. So if we fall through that, it's possible maybe, especially if we're looking at a triangle here, so this is A and this is B, it's possible maybe this is A, B, and C still, so a larger triangle forming. In which case, then, this is your initial invalidation level. And if you drop below this one here, this 44, 232, 86, then the triangle is not legitimate. It's done. The idea of the wave 4 triangle, right? So, I mean, that's kind of what we're looking for. If we look at this, we say, okay, well, is this potentially a triangle? Yeah, I think it's potentially one, because usually your triangle, because it goes sideways for so long, you usually see the pivot right there in the middle of it. Because, again, you have all that up and down below it, and the pivots are just based on those previous areas of support and resistance. So often, if you do have a triangle, it does oscillate around the pivot. So, good possibility it could be one there. Now, if I'm looking at this, I've got a 1, 2 here, right? So this area right here. So mine goes 1, 2, 3, 4. Now, this would make sense potentially as a triangle, because this is a pretty quick and easy bit of a flat correction here going on there. So, it's good possibility there. Or, maybe even this just becomes wave 1 up here at the top, and you've got a simple zigzag down. So, we talk about that theory of alternation. If wave 2 is a simple, short, sharp kind of drop, then wave 4 is usually going to be more put out, right? Now, if wave 4 is a triangle, then often wave 2 is going to be some other type of, like a flat. And so in this case, again, we're already looking at this as a flat here, A, B, C. So it would make sense that maybe this would be a wave 4 as a triangle. So, but I mean, if we invalidate by dropping below this swing low here, then it's possible we could still have an A, a B, and then A, B, C for C here. But if we continue to drop down below this level, then that's invalidated. And what we're probably looking at then is that A is done here, and this is B. And so, we've got A, we'll have B, and then we'll have C up to finish wave D. But in all of this, there's absolutely nothing going on here that is even remotely suggesting that we should be heading down to some new lows or something below, way down below over here, or even below here. I know there's people out there screaming it up and down, but there's nothing going on right now that says that that's a realistic kind of, a real possibility, something that you have to really be concerned about at the moment. That can always change, okay? That can always change. More information comes in. As a trader, you should be willing to change the way that you're thinking, okay? So, but right now, another way to look at this, again, look left, right? So see this area of support and resistance right here? We broke up through that. Large candle spread, large volume spike coming up through that, right? And all we've really done is kind of come right back down to this area of support here and test that and print higher lows off it. So when you zoom out a little bit and you look at this, that's all we've done. So if you're fearful this is going to drop way down here right now, you're not paying attention. You're not zooming out a little bit and looking at where we are. Yes, it could still go down, sure. But right now, until it does, I'm definitely much more of the mind that it's going to go up higher. Because you've got this huge area of support resistance right here that all we've done is come back in and test and printing higher lows up off that. Okay? So hopefully that makes sense. Let me see here. Yeah, those are standard auto-generated pivots here. By the way, guys, if you're interested in these pivots and you want to get them, all you have to do is go up here if you're using TradingView, where it says indicators up here. Click on that. Type in pivot. And so if you go to technicals here, pivots point standard. That's what you got to click, okay? If you click this little yellow, this little thing next to it, and it becomes a yellow star, then all you have to do is go into your favorites here, and it'll be listed there with everything else that you've got little stars clicked by, okay? So it makes it quick and easy to pull it up on that. Let me see here. Kind of catch up with you guys here. Daddy OJ says we're right below the 200 MA. Is that on the daily? Is that what you're talking about? I'm not a big fan. You guys know I'm not a big fan of using, what are they called? Moving averages a whole lot. I'm not usually using those. But yeah, so. But okay, yeah, Dan, that would be one of the ones I would be interested in watching, though, more than anything else, I think. Well, more than most of them. Because it's more of a longer-term trend kind of thing. So yeah, so we'll look for that breakout back above it, and maybe people jump on board with that. 83 Mad, what's up, man? Let's see here. Do I ever look at altcoins to look for Elliott wave confirmation? What do you mean, to confirm what's going on with Bitcoin? No. The best I think that you do, if you want to understand maybe what Bitcoin is doing, look at your other large caps, your other top 10. Look at your Ethereum and your Litecoin and as much as you hate it, your XRP, stuff like that, because generally those large caps are going to move together. So if Bitcoin is honestly kind of bullish, then you should see the same thing happening with the others. Ethereum a lot of times has a lot of the same structure as Bitcoin because it is so large as well. But even on the ones that don't, many times they'll have similar movement or a similar count, even if it's not the exact same movement. And so you can kind of look across it, and if all your large caps are kind of doing that same general count, then usually you can kind of get this idea that it's probably doing that. Yeah. So anyway, yeah. Nobody's ignoring... God. TV Canal, man. I sometimes wonder, is this a language barrier or is it just that you're a jerk? I try and ignore it a lot, but the way you talk is very... it's very crude. And usually I block people like that because it doesn't do anybody any good. Nobody's ignored the weekly pivot. I've talked about the weekly pivot consistently every time we're on here. So if it's a language thing, then I think you need to check yourself a bit and kind of do a little bit better in understanding how to speak with other people. I'm doing my best to give you the benefit of the doubt, but this isn't the first time. And I don't put up with nonsense. Again, people are here to learn, are here to talk about stuff. Okay? So hopefully it's just a language thing, but really, at this point, I'm not so confident anymore that that's what's going on. For what he was talking about here, it's the same thing I've continued to talk about, the weekly pivot right here. All we did is pull up to it. We've got higher lows and higher highs up into it. So, you got to rant. I hate ranting. It doesn't serve anybody any good, right? But if we look at the structure here coming off here, we notice we got these higher highs, higher lows, right? The pullback, as you can notice here, came back on this previous area of resistance as support. And from this point, you see we got a high, low, higher high, potentially going to get, a higher low. Well, we got a low, high, higher low, higher high. So we do have a bullish market structure off this January 24th swing low. As I've continued to say, and maybe TV Canal has just not been paying attention, is that on this larger term picture, what we're looking at is for a impulsive breakout above the weekly pivot. Now, what do I mean by impulsive? I mean larger candle spread, larger spike of volume coming out of that as it breaks out through here. But it's not good enough just to get above the pivot. We need to get above the swing highs right here by it. So the swing high here is around 51,995, 5210 or 52,100. So again, still that's kind of that target we're looking at, right? So if we can get an impulsive breakout above this, what we're most likely doing, exactly what I've talked about, is we're going to come up, we're going to come down back to this area here, and then we're going to break off. Because when you trade pivots, this is usually what happens. You've come in down between the pivot and the S1. You're rallying back up to the pivot. So if you can get that impulsive breakout above the pivot and then nearby swing high, that should confirm that the bottom's in here. You'll usually rally up toward that R1 pivot. Probably a little bit lower here. Again, this is that 60,000 area right here, this previous area of resistance and support. So the idea would be you get wave D up there, wave E back down to this right here, this 50,000, 48,000 kind of area, and then you head up in wave 5. If you cannot make it above that, and you're coming down here. See, the problem with this weekly is the only way you confirm that you're having an issue here is if you drop at least below this swing low right here, 34,322. Because, again, this is bullish market structure. High, so you've got your low, your high, your higher low, your higher high. And so if you come down here and now make a lower low, then you break that structure. That trend is no more. So, again, you don't, on the weekly, you have to, the larger your time frame, the larger your validation and invalidation levels are. They have to necessarily be so because you only have so much movement. But, a breakdown below that would say, okay, we're probably not going up through here, and I'm looking down here at the S1 then. But the structure, the overall structure of this right now, with what I know with, Elliott wave, doesn't make a whole lot of sense to break down from here. Also, of course, we looked at the whole Wyckoff structure here, as likely accumulation here, reaccumulation before breaking out higher. As I've also talked about, once you get that breakout through this pivot, like I'm talking about, that should signal that you're coming up at least to the R5 pivot here. So that's 148,700 or so. And often you'll spike out above it, especially on these long-term, these weeklies. So if we get that breakout above there, of course the next step is the breakout above the R1, the swing high right there. But you should be looking for it then to rally all the way up through the Rs, through all your resistance pivots here. Okay? So yeah. Ebo, what's up, man? Good to see you checking in here. Let me see here. Claudio, man, have a great day, bud. Let me see here. So anyway, so that's kind of what we're looking at from the near term to the longer term, depending on how you're trading the markets, guys, how you're looking at at your markets. Okay. So we'll see how this ends up playing out now with this here. Coming over here to the monthly, of course. Monthly looks sharp. Monthly, by the way, guys, your next bigger time frame, right? What do we have? We have higher lows here. We have lower lows on the oscillator here. Those lower lows, when it's higher lows here, that's hidden bullish divergence. That means continuation of the trend. What's the trend? The trend is up here. So this lower low here, when we're getting higher lows, suggests that the trend will be continuing higher now. And of course, down here in oversold, we almost bottomed out and oversold, crossed bullishly last month coming into this month now, and looking to make a run for the breakout of the oversold there. So, even right here locally, guys, you can see you've got a high, a low, higher low. I mean, that's just the continuation of this trend here, right? Low, high, higher low, higher high, higher low, higher high. Potentially, now, this is not necessarily a higher low yet. You have to break out above the swing high to say this is a higher low. because this could still roll over and come down lower, right? So it's not necessarily a higher low yet in terms of the structure of what we're looking at here. But the setup looks good so far. Look at the volume. Look at your volume here at the bottom, right? Look at your volume at the top. Little bit of a spike of volume at the top. So some selling coming in by the big players. But look at how much greater the volume is down here at the bottom. They're definitely buying here where they bought previously. Look at the volume here at the bottom. Coming into these three. Coming through there. So you had volume into these two especially. The breakdown and then the doji, almost a doji here. Hitting that area again gives you another spike of volume. So it tells us that there's a lot more buying going on here by the big players, which is what we're trying to follow, rather than up here, the selling. So again, more context to understand that overall it does appear that we will be making new all-time highs, rather than, breaking down below here. But again, nothing is ever 100%, guys. Nothing is ever guaranteed. But we will continue to watch it as we go through here. By the way, you'll notice we've pulled back about here. Remember earlier we were talking about how it was a bit of a bullish engulfing candle. We've pulled back now. I said we had 30 minutes left, so still too early to tell. As you can see here, we're pulling back now. That doesn't mean we can't pull up. But again, we need to watch. This is why validation, invalidation levels are so important, as is proper risk management, right? I don't even think if we can zoom in there, we could really see anything. I mean, it's possible maybe we have a flat correction going on. Maybe it's a 1, 2, or a 1, A, B, and then 1, 2, 3, 4, 5 here, maybe. Possibly. But it's the 1 minute time frame, guys. It's ridiculous to try and trade on that. So we'll wait to see if we get an immediate breakout above this swing high. That'll hint that wave 2 is probably complete here, if we can get a breakout above that this big candle resistance up here. Let's see here. Let me see here. Esteban, what's up, man? Good to see you as always. So hopefully that, I just gave you guys a whole bunch of information on how to look at these charts using various things and what they mean and how they could potentially go and where to look for your validation and validation levels. Hopefully it helps out a lot. Let's kind of move on here for now. We can look here at the DXY. Again, this is the DXY, guys. This is the same one that last year. Here, I gave you all the reasons in the world why this was potentially the bottom here. We're headed up. We're just about up to that 100 right now. We're at 99.4. Coming off this swing low down there around 89 and some change. So, looking for it to continue up higher here. If my count is correct, that gives us a minimum expected wave 3 up here at 107.61 minimum. And then that means maybe a wave 5 getting closer to this huge supply structure up here around 114.75 potentially. But what does this mean for anything? Well, again, your dollar, it's not that things necessarily that things become bullish or bearish because of the dollar. The dollar just it gives you a visualization of whether the overall global market, is feeling more risk on or risk off. Now, depending what slice of what market you're in, crypto, legacy, whatever, you may or may not be seeing the effects you think you want to see. So with the dollar going up, Bitcoin isn't dropping down like a rock, right? That tends to throw people off. But it's because Bitcoin is its own market, and it's a newer market, and people are still wanting to get rich overnight, and that's the best place they see to do it. Versus legacy, which has been around a lot longer and shows a lot more significance in potentially having reversed already. We'll take a look at those charts here in just a minute. So, again, this could continue higher while Bitcoin does as well, and then Bitcoin tops out, and then, the dollar continues up. Or, maybe Bitcoin moves with it. I don't know. Bitcoin has always acted as a risk-off asset, risk-on asset, which means that when the market is risk-on, when people are willing to put money out there in more risky things, then Bitcoin does well. But the thing you have to remember about Bitcoin, guys, forget everything you hear about everybody else out there who's trying to, you're evangelist with Bitcoin. I don't have anything against them, but remember, Bitcoin started in 2009, 2010, right? So it started in this secular bull market that we've had since the great financial crisis. So Bitcoin has never been around when the economy has dropped off a cliff, when the economy has gone into a recession or a depression. So, and it's been small up until, the last few years, really, right? It's kind of getting bigger now. So the way it's acted and the way it may act are two possibly completely different things. So we will see how things continue to go. Right now, dollar should continue higher. That's the expectation. Locally, we've got a minimum expected target up here of 100.5. A rejection in that area, I think, sends us back down here, at least to this wave 4 down here, 97.68 kind of area. Potentially toward the daily pivot down here. I don't even know. Do I have the daily pivot set up correctly? Let me see. Nope. Daily pivot's got to move up. All right. So at least here, but probably coming down around this, either 94.6 or this area down here. Wait, let me see here. If I'm looking at this, that gives us a 5, a 5, a 5, a 3. Okay, so let me see here. So that's going to give us wave 4 of this wave 2 on my count here. 1, 2, 3, 4. See this area right here is 38.2 at 96.976. You see how it's this area of resistance right here? Perfect target. So if we're getting that 100.5 and get rejected there, I think we're coming down either 96.97 area or the 50% around 95.91. And then that gives us this wave 4, which means then we've got our wave 5 coming up higher there, which would be almost the EQ of that structure. If we get the 38.2, if we get the 50, goes just above it. So as I was talking about earlier, around that EQ kind of area there. And then, of course, potentially heading off higher there. Because that's only then, whatever we've got going on with all that. I think my count... Oh, no, okay, 1, 2, 3, 4, 5. Okay, never mind. Thought I had an overlapping count in there somewhere. So, yeah, I mean, again, looking for that bit of more move up there. If you're trading, euro, you'll have a bit of a reprieve then, is the expectation. So your euro should finally rally a bit, get a dead cat bounce as, the DXY pulls back. But then as that rallies again, euro's probably headed lower there. If the count continues to hold up, which is what we're looking for at the moment. So, again, just kind of let you know that the market is either more risk on or more risk off. Because when the market becomes fearful, they tends to go to the dollar. Many reasons for this. One of the biggest reasons is that, especially if as they go into the dollar, when U.S. interest rates are rising, is because so much of the world's debt is denominated in dollars, so it has to be paid in dollars. And as the interest rate goes higher, those dollars become more expensive to get. This is something I've explained time and time again. And so it becomes a lot more difficult to service that U.S. debt that a company or a country may hold. And so they can't do other things that they want to do, which again leads to the whole recessions and whatnot. But yeah, when you're seeing this, we've got this rallying now, obviously, because of the way everything's going. With inflation and all that kind of stuff, prices rising and all that. So, we had our, the government stopped buying all what it was buying. It's talking about, not the government, the Fed. It's talking about normalizing its books now, which means selling treasuries and mortgage-backed securities. They've talked about another 6 rate hikes. Now, will we get that? We'll see, but they're pretty intent on it at the moment. As I've always talked about, though, the Fed is always playing catch-up, guys, okay? Don't think that the Fed controls what's going on. The Fed is always playing catch up. And so if, let me see here. Look right here. Here's a great thread I just added this morning We're talking about I can't even say it, the bullwhip effect potentially coming in here. So Craig Fuller, as you can see here, he's the transportation and supply chain media executive, founder, CEO of FreightWaves, American shipper, and the CEO of Fly Magazine. Basically, this guy's life, his 40-somewhat years, has been all about freight, transportation, okay? And so he comes in here and explains why that bullwhip effect may likely be coming in. And he talks about how, if you guys go in this, you should go into this and read it. It's a great thread. You can follow me at TX West Capital. But that thread right there, he goes in and he starts showing you the data. He's showing you the charts. He's showing you that the number of trucks have now, they've been below the freight, and now they've overcome freight. So there's more trucks out there than freight. And so it talks about all these different things like that and how it's showing that, prices are likely to come down. Excuse me. So the bullwhip effect just basically is that the idea that these like small kind of changes in supply and demand at one end of that supply chain. Remember, we've been talking about the supply chain for the last year, right? And how that's the biggest culprit in these rising prices, right? In everything, because it makes it more expensive to build houses, to manufacture things and whatnot, right? So it leads to higher prices overall for us. But the idea is basically that you've got that small change there in that, in supply and demand at one end of the supply chain, and that leads to this much, much bigger swing at the other end. So the idea is that, again, this is what I talked about within this last year, right? I talked about how as these prices were rising and there was all this demand pent up, that these companies were going to be over ordering, right? And so the problem with over ordering, this happens every single cycle. And Craig even says it himself in here, again, having followed this for his entire life. And there's always this discussion. There's always this, it's different this time, just like with the dollar and everything else. And hyperinflationistas right now, right? But the idea is that we had all that demand, right, coming in. And so these companies then overproduced and overordered. And the supply chain was so screwy, right? We talked about how the trucks were the issue, right? We had everything sitting in the port of LA. Remember, you guys, we talked about this? And we said that a lot of that was sitting there because they didn't have enough truckers coming in and doing it. And they were saying some of that was because of, the COVID restriction, all this other stuff by the government, right? And so now we have all these trucks, but prices are high. Prices are high, people don't want to buy them anymore. And he shows you in the charts that there is a drop-off in that demand. Well, now we've got more trucks. We've got stagnant supply now and lacking demand. Demand's falling off at a ridiculous rate. So what does that mean? That means prices have to drop. If you've got stuff sitting in your warehouses, guys, it's not good. You don't just sit there and go, okay, well, we'll just wait till somebody's going to buy it. You got to cut them prices and try to get out what you can. The other thing we've talked about, I've got it right here. We've talked about unemployment before, right? So I've got this great little chart here. This is the unemployment rate, the weekly unemployment rate going back all the way here to the 40s, right? And what we notice is generally around this area, this is that 3.5 kind of area, that marks the top. So again, as with markets, when we get to extremes, that's when everybody gets, when the market's running up and it gets to an extreme, everybody's bullish, right? Everybody's buying, right? It can't possibly go down, and then it does, right? Or it's at the bottom, I'm too scared to buy. It's gonna continue to go down, right? And then it turns around and goes up, right? You guys have to understand this is what happens in markets. When you hear everybody talking about extremes, about how price or whatever it is can't stop going up, or how it is gonna go down, continue going down, they're just kind of giving up. These are these indicators, these social mood indicators that we use often to figure out what's going on with the markets. And so what generally happens is we had 3.6 here. Was that last week was the non-farm payrolls came out, the unemployment, 3.6. Now it can go down a little bit lower, and it may, but overall I think we're probably just about at that bottom area, which means unemployment's going to start rising. Now, why is that important? Because I just talked about the fact that that there's overproduction, warehouses are filling up, demand is down, trucks are up, which means they have more options, right? And so we've got all that. And then we've got unemployment is likely to start rising. Not tomorrow, but coming up, right? Sooner rather than later. So unemployment means less money to buy stuff, right? What else have we talked about? We've talked about housing. Right here. Here's a couple of articles right here that I've shared with you guys here the other day. The U.S. housing market's been showing signs of exuberance. Basically, what we're seeing right now is looking a lot like it looked just prior to the 2008 housing bubble, the great financial crisis. When it comes to housing, what's going on there? Remember what I told you about prices? They can't continue to go up forever. Oil, $300. Houses going to keep rising in prices, right? But if people are becoming unemployed, there's less people able to buy, right? People are already pulling back on what they're spending on goods and whatnot because the prices have gone so high, right? They've talked about the price of houses to continue up because the builders have all these orders and whatever, but who's going to follow through? I think we're going to get a whole bunch of supply sitting on the market. Redfin right here, they've got their economists there talking about what's going on. Again, same idea. Surging mortgage rates, which are going to cause people not to buy as much. I think we were around 2.5% back in November. We're about 4.1, 4.2% now, just a few months later. And it's going to continue to rise. As long as the Fed keeps indicating that it's going to raise rates, your mortgagers are going to continue to raise rates as well. People are not going to buy. I mean, it's still pretty low, but people are already showing that they're not buying, right? Read the article to talk about how the new houses and the appointments and all this stuff are all down now. So a lot of this is setting up like recession minimum incoming. Now you guys know I think we're probably got a larger depression type thing coming in. Finally, people they were talking about it. You've got your hyperinflationistas, which are basically just your basic retail guys out there who don't have any economics background and whatnot. Shouting it because it's a soundbite. It's the same thing that happens every time, right? But that's just a misunderstanding of where money is actually created. It's not the Fed, it's the bank level, right? The Fed can print all the dollars it wants, but if it can't make it through the banks out into the broader market, it doesn't mean a thing. If it makes it out of the broader market and people take that and stick it in the bank, there's nothing to lead to higher prices. Now, that isn't going to happen with all of it. Some of the money's going to get out there, and that's going to have some effect on prices, right? But just because the Fed prints it does not mean it's going to lead to higher